Great week of trading last week, and I've got 3 new ideas for you this week, and more importantly, an important lesson on how professional traders handle those frustrating situations where their rules don't really make sense. You'll see what I mean. Let's hop in. So we're going to kick off here on the dollar Canada, and I've got a cool trading opportunity to share with you, and an interesting one because it's one that I'm not too excited about, and I'll tell you why. So we're going to start off by going through our IPDE process. That is our 4-step process for how we consistently analyze a chart. And you guys know my formula: consistent analysis plus consistent execution equals consistent results. So the first step is identify. What has price done? Where is price at? Something I like to do is I like to take my horizontal line tool. I like to draw it at our most recent level of structure. Structure is important to me, so it's the first thing I always ID on a chart. And I ask myself, what has price action recently done? Well, if I zoom in, we're going to see that price action at one point tested and held this level of structure, creating a new high. So I'm going to adjust this up a little bit. And then if you look very closely, we actually ended the week with a higher high, higher close candle. Now, this is a very interesting situation because if you've ever seen any of my lessons on reading a candlestick, although this is a higher high, higher close candle, meaning that it violates a previous level of structure, it is also a weakish candle, meaning it is considered a weak bullish candle. So even though it is technically bullish, because the wick is so high to the upside, because the close is so low to the downside, this would actually be a negative sign. It leaves us in this place where we have technically a negative candle, but we have confirmation of our rules: higher high, higher close. So we're going to come back to the negative candle part a little bit later, but let's first look at the trading opportunity following the higher high, higher close path. So by identifying that we have a higher high, higher close candlestick, that allows me to make the prediction that price action is likely to go higher. That is my directional prediction, and that's going to set up my confirmation bias, meaning as I go down to a lower time frame, I know that I'm looking for bullish opportunities, bullish opportunities, bullish opportunities. And this is very important because so many traders come into the charts and they don't know whether to look bullish or bearish, and they go down the lower time frame and the whole situation gets flipped upside down. And this is why it's so important to have that consistency. You want to have a routine that allows you to determine what side of the market to focus on. That way you can focus on it. So going down to the 4-hour, which is going to be my lower time frame, you can see a little bit of end of the week kind of blahness. It was a US holiday here, so there wasn't a lot of liquidity in the market. But if we go down one more to the hourly, you're going to see something very interesting. After a very strong week for the dollar, end of the week for the dollar, due to the recent monetary policy news that came out, we ended with a very bearish move here on the dollar Canada. And you're going to see this across a few Canadian pairs, and this was due to a retail sales report that came out that looked good on the surface, but wasn't too good underneath. The point is, we have a pullback, and as trend continuation traders who are looking to go bullish, this is exactly what we're looking for. If I take a second just to measure out the ebbs and flows of the market, and this is something I recommend all of our new traders do, it's pretty much going to give me a roadmap of what levels to pay attention to, right? Price action goes from a swing low to a swing high. We retrace. We put in a new high. We retrace, right? Connecting the dots right here. You can see the points that are important to the upside and the points that will be important to the downside. And as a pullback trader, when we pull back, I'm looking for us to at least hit the top of this previous extension, and we need to complete our entry or hold above the top of this outside return. So you can see we're diving down right into that zone. If we want to add a little bit more confluence to that, right, we also have something called hidden divergence. You can see that price action has a lower low right here and currently a higher low right there. Our RSI should be giving us the same signals. Let me see if I can go back and find a situation where we're doing that, right? You can see the lows are getting higher here and the lows are getting higher here as well. If we look at this, however, right, we can see that low number 1 is right here in the RSI. Current low number 2, if I move my mic out the way, is lower than that level. That's something called hidden divergence. That is going to be a positive sign for a trend continuation trader. So this is a good trend continuation opportunity. As you spoke about in the Bitcoin video, it would be very aggressive for you to just buy at market on the open. I don't think that's a great idea. I always like to say we want to be predictive in our analysis, reactive in our execution, meaning I want to predict if price action holds this level, then we're looking to a move for the upside or looking for a move to the upside. But we want the market to give us a sign first. This is where you're looking for your entry reason, whether it's a single candlestick formation, whether it's a multiple candlestick formation, whether it's a complex or a simple pattern formation. That's going to be completely up to you. But this is a good place to look. And what I would anticipate market doing is going back up to the upside. Now, I personally would not be interested in any type of continuation. One, because of the candlestick formation that we have on the higher time frame. And two, even if we go back to the daily and we look left, right, there's not really a zone for us to go higher. If we go to our next level of structure, right, we would initially look right here. Akil loves his elephant candles. This big red candle is the elephant candle. Take the zone prior to the elephant candle and use that as the place that you would anticipate price going to. And you're like, oh, look at that, 142.40s, right? Plenty of room from our red line. But the actual zone prior to this elephant candle, if you look inside, actually stretches this out a little bit further. That long wick candle to the inside, that's going to give us our zone. And you can see that we're pretty much already in the zone, hence why we saw this kind of negative candle to begin with. So I would be certainly conservative with that. Nothing wrong with shooting for an extension, but maybe do something where, hey, I'm going to take a target one off at a retest of the highs, and then I'll hold on for a secondary target once stops and move to break even for an extension if it does happen. Because we should see dollar strength, I would think. I think this is a little bit of a Friday. This move is more of an overreaction. Again, low liquidity on Friday. When there's low liquidity, the markets tend to move more off of lesser ranked news. So it wouldn't surprise me at all to see a big correction here. Just maybe a little bit cautious there. Now, real quick, going back to our weird candle. You're saying, Akil, you don't like this candle. You said it's a negative candle, yet you're still looking for long opportunities. Why is that? And the answer is because I have to, right? I'm a rules-based trader. So I have rules. They are testable. They are verifiable. They are repeatable. They keep me consistent in the market. I can't just make the decision one day to not follow my rules, even if I don't like it. And that's the discipline that is needed to be a rules-based trader. But something that we can do is we can make adjustments to our rules, not now, but in the future, right? And I've shared kind of my routine on that before in previous Trading Coach podcast episodes. But here is something I would do, and this is the importance of journaling. I forgot who asked me this the other day. One of our Tier 1 members shot me an email about journaling. This is why it's important to journal more than just like your data, entry, exit, all that fun stuff, right? So let's say you're looking at this and you take the observation that you made prior to the trade. Hey, took trade on dollar Canada or looking to take trade on cut dollar Canada. In the notes section, you're typing in, hey, we had a negative candle. One, it was a higher high, higher close that came at a bigger rejection level. So there's not really any room to the upside. Two, it was a negative candle. Although it was technically a higher high, higher close, it was actually more of a bearish candle than a bullish candle. You type that in your notes and whatever other observations that you make, you see how this trade plays out, and then you do that for repeated trades like that. Then what happens is if you start to see a pattern, if you start to see a handful of trades where you had this same situation where you had a signal, but it was a negative candle and the results all seem to not go in your favor, then maybe it's a rule that you can change where you say, hey, all of a sudden, yes, I need a higher high, higher close, but I also need it with a positive candle. What you also might find is that it makes no difference. I've had traders do this before where a rule that I had, or something, not a rule that I had, but for advanced pattern formations, for example, I used to say that, hey, I hate when price consolidates right near my entry and then drops, because in my mind, I'm like, well, it came very close to the entry and then fell off, and now the opportunity is not going to be there anymore. And one of our traders over at Tier 1 actually tested that and said, hey, Akil, I went through thousands of trades of situations where price action consolidated right before the entry, and I saw that it actually made no difference. So you don't want to assume stuff, right? You want to test it and verify, what your assumptions are. So good lesson here on that. Next, we're going to head over to the euro dollar. And like I said, dollar strength to end the week. We're coming down right to, or we came down right to our previous level of structure right here. Now, not really interested in anything on the daily, mainly because we're right below where I would look for targets at here with the euro dollar. But what you're going to see is, again, a high momentum bearish candle, 2 of them in a row, actually, boom and boom. You're going to see a bullish candle here with a long tail to the downside, meaning a rejection. So right away when I see that, I'm thinking potential reversal, potential reversal, potential reversal. And as I dive down to a lower time frame, let's go straight to the hourly. What do I see but a classic reversal pattern? So if we connect the dots again, because I think this is a cool exercise that all of you guys should be doing, no matter your level of trading, right? It's never too late to practice this, or you can never get enough practice of this. We have a swing low to swing high to swing low. We have a swing low to swing high, and then we come back down here, we come back up here, we come back down there, we come back up here, and we're starting to form what is called a head and shoulders, right? In a head and shoulders pattern, we're gonna have a few different things happening. We're gonna have a left shoulder, we are gonna have a head, we are going to have a retest of our neckline, which is currently right here. That may change. And then we need one more failed extension to be our right shoulder. So we got some time on this pattern, but something that you can put on your radar. Now, there's 2 ways to look at head and shoulders as far as the validation point. You can connect the dots, right? The highs of the neck right here. And if price action violates that level, wrong tool, here we go, violates that level, you have a nice little head and shoulders completion. Or you can take a horizontal line, which I like to do right here. I like this one particularly because it's an ice zone, so a previous level of support and a previous level of resistance right there. And then a violation of that would confirm the pattern. So if we confirm it here, my expectation is that we will travel to retest our previous structure highs right there. So it's kind of a short and sweet in and out type deal, looking at a potential move from, what is this, 114.89s just up to about 115.14. So not too much room. But if we then violate this level, and this would be the next step, right? If we violate this next level of structure, then I would anticipate a much further path to the upside, looking at a move from, what is this, about 115.29s. Where's my arrow? All the way up to about 115.89. So kind of a 2-part deal here. First violation, look for this move. Second violation, look for that move. Now, on the other hand, if we were to go down, I'm not going to spend too much time on this because we're away from that right now, but there is a lot of room to the downside as well. Just keep one thing in mind. In order to go to the downside, I would need a violation of this sneaky little low right here from, what is this, a year ago in the summer. If we can violate that level, we're probably likely to continue down to about 112, let's call it 113 even. So some pretty good room to the downside as well, but we'll need let's not even worry about that until we get a violation, or unless we get a violation. Advanced patterns have been on a roll for us recently. Yes. So I want to give you one more today. This is going to be on the Aussie New Zealand, probably one of the smoothest patterns you will get. Also a good lesson on rules. We're going to start here at the upside. This is going to be my X leg, and this is going to be my A leg. That begins my pattern. I want to take my Fibonacci extension, retracement tool, from the swing high to the swing low right there. And I want to ask myself the question, where does my B leg come to? Now, always check your data. Mine did not hit the 618 retracement, so I count it as a 50% retracement. There are teachers out there that teach close enough. I have zero problem with that. But what I would say is this, and we're working with this with a trader on our platform. If you're going to use the close enough rule, you need to define what close enough is. If you don't define what close enough is, it's not a rule. It's just you randomly doing whatever your heart says to do. And we never want to follow our heart in trading. It leads us to really bad places. So just make it a rule, then the problem is solved. You know exactly how to define close enough. So I don't have a close enough rule. Either it hits it or it doesn't hit it. So because we don't hit the 618, this is going to put me on alert for what's called a bat pattern, which is my preferred pattern anyway. And that's going to look something like this. Again, we had our swing high to swing low being our X to A, our first leg. Our retracement back up being our A to B, our second leg. Our failed extension to the downside, which is going to be the B to C, the third leg. And if price were to come to our 886 right in here, that would complete our bat pattern. I believe I have an emoji for that. Haha, I do. Look at that. And that would be a potential bearish trade back down. So, hey, if you like what you saw here and want more of a training and not just a looking at ideas, here's what I recommend doing. We have a workshop coming up this week. This is your final warning about it because we're closing it down very, very soon. Registration link is below. It's 2 days. It's online. It's recorded so you can go back and review. It's interactive. You can come and ask questions. It's just not a PowerPoint presentation. We want to teach you how to trade. This is specifically designed for beginner traders who are interested in learning what a professional trader does, how they operate, and how they set up their business plan in the market. So sign up now because it will be closed down soon. And if you're mad at this video was short, I put out a lot of videos this week that you can look at as well. So go and check them out. All right. Until next time, plan to trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is